Hey everybody, Smart Silver Stacker here. Welcome to another Smart Silver Stacker live stream. Now the reason I'm hopping on this live stream today is because we have had some significant price action in silver today. The silver price coming under not a huge amount of pressure, but a pretty good little decline in the price of silver here today. We have right now, as you can see, a decline of about 3.76%. And that is off of the lows of the day. We were a bit lower just an hour or two ago. We were down over 4% on the lows, although the price does seem to be rebounding a bit. We're going to go into what is driving this decline in the price of silver. And also, I'm going to want to read between the lines here a little bit, because the data that caused this decline, I don't necessarily think it means what markets are interpreting it to mean. And we'll be digging into that here in just a moment. I do see some folks popping into the chat. Thanks for tuning in. If you enjoy these live streams, then please do hit that like button, help spread the word, help get this out into the algorithm, and spread the word about hard money and silver, real tangible assets. Now, today's video is brought to you by SD Bullion. That is who we are looking at right now. And if you're in the mood to buy some physical metal on this dip, make sure you check them out with the link down in the description. Now, one of the things that I hear a lot in the comments of these videos when I am commenting on the price action in silver, I'll do a video about maybe why the price of silver is down. And I get a lot of comments that say, well, it's because the US dollar index is up. And yeah, it's true that silver and the precious metals kind of trade typically inverse to the US dollar index, and that's kind of what you would expect, because a lot of times what's happening is that the price of the precious metals is kind of staying steady, but the price or the value of the currency, the US dollar that you're measuring them in, is what is fluctuating. And today we did see a bit of a pop in the US dollar index, but you got to look at these things a little bit deeper. You can't just say, well, the dollar index is up or the dollar index is down. You want to look at what is driving that move in the currency. And so we're going to get into that here in just a moment. I do see someone, an appropriate name, a spy, saying, get out of silver ASAP. It's a trap there in the comments. Well, I don't know. I doubt very much that too many people are selling physical metal today as part of this price decline. I expect mostly it's probably just paper silver, the ETFs and futures contracts being sold. But, yeah, if you think silver's a trap, if you think real tangible assets that have been a store of value for thousands of years are somehow a trap, well, then, yeah, I encourage you to get out. Yeah, there we go. Someone in the chat saying 1,000-year-old trap. Interesting. Yeah, 1,000-year-old, really like 2,600-year-old if you go back to the first silver coins. But anyway, let's take a look at this data. So what caused this decline in the price of silver and this pop in the US dollar index? Well, it was this US home construction data, which was up quite a bit. It surged by the most in 3 decades in May. So we've got a lot of new housing starts. And what's going on here is this is another example of this kind of good news is bad news cycle that we have been witnessing. And the idea is that, well, if there's more homes being started, that's a sign of economic strength, and therefore the Fed, who is, admittedly very data dependent, I mean, they do kind of react to the data. They will take this data and they will say, well, now we have more room to hike. And so that is buoying the US dollar index a little bit, and at the same time, the precious metals are taking a bit of a hit. So that is sort of the initial interpretation, but I think investors are kind of getting this wrong. Now, first, I just want to go over a few things in this Reuters article here, published about an hour ago, or updated an hour ago. One of the things that it says here about the housing data, which came out today, is, here's a chart, by the way, of the new housing starts. So you can see it did rise substantially in May, but one of the things here, this is from Nationwide senior economist Ben Ayers. He says, while housing starts data tend to be volatile and this figure may be revised down in coming months, the enormity of the increase suggests that builders are broadly expanding operations this summer. So first of all, maybe the housing data is just erroneous, more of these funny numbers, and they're going to be revised lower. But also, I want to point out something about this surge that we've seen and about the home builders. So if builders are broadly expanding their operations this summer, that is kind of interesting because there is an anticipation that the Fed is going to continue hiking policy, and they're going to continue hiking rates. They're going to continue hiking the federal funds rate throughout the rest of the year. They told us as much. Jerome Powell, the current chair of the Federal Reserve, told us as much at the last FOMC meeting. And if you look here at the CME FedWatch tool, you can see, according to the data from the CME, there is a 74.4% chance of another 25 basis point hike at the next meeting that's going to be held on July 26, and only a 25% chance or so of another skip or pause, whatever you want to call it. But when I see this, when I see builders who have a significant amount of skin in the game here, they're telling us that they are okay with expanding their operations this summer. Maybe that's a sign of economic strength. It could also be, this is my take, possibly, that the builders understand that the Fed is not going to be tightening policy later this summer. Maybe they anticipate more easing or more skipping, more pausing, whatever you want to call it. And if that's the case, then I would view this dip in the price of silver as a huge buying opportunity, because that means that markets are getting things wrong here, selling off silver on this news. If the builders think that policy and monetary policy is going to be looser throughout the summer and they're going to be skipping more, possibly even cutting rates, then that could also account for why they are aggressively building homes, because the mortgage rates have been rising. I think they're down from the peak now. At some point, the prime rate for a 30-year mortgage was just over 7%. It's a little under right now, but maybe builders anticipate that number is going to be coming down even further. And that's certainly possible because, as tough a game as the Fed is talking, I think the Fed is also aware of the pressures that are being placed on this economy from their inflation fight. And I think what's more likely than a deep recession, which I think is what we're headed towards, I think what's more likely than the Fed hiking into that is that the first real confirmation of significant economic pain, whether that be in the commercial real estate sector or in the banking sector, the regional banks who are loaded up with these poorly performing U.S. treasuries, if they start to experience a lot of weakness, if we see more bank failures, if we see a collapse in commercial real estate, which will spread to the banking sector, I think we could even see rate cuts for the rest of the year. It doesn't seem like markets are anticipating that at this point, but I do think that could well be what is coming. And to me, this data where the builders are getting kind of gung-ho and they're going out and building all these houses is almost indicative that they anticipate the same thing. So, silver is still an incredibly undervalued asset. It's interesting, too, that we saw a very small hike in the U.S. dollar index. I think it was up maybe less than 1% on this news, although it was a move up. But silver down over 4% on the lows of the day. And then right now you can see the dollar index almost flat on the day. Now it's given up most of the gains. It's up just a little bit, up 0.03%. And yet silver still down 3.76%. So that is a huge move. And to me, this is a sign of pessimism in the silver market. It's a sign of capitulation among investors in the physical precious metals, or not the physical metals, but the paper metals. That's what really drives this price action. And like I said, I doubt very much that stackers were coming out in droves and selling their coins and their bars based on this housing data. But what we did see was very likely paper investors, folks with ETFs, futures contracts, unloading on this data. And that drives the spot price down. Because remember, the spot price, what we're looking at right here, this isn't the price of physical metal. This is just the price of a paper futures contract. So that's what's going on in the price of silver today, folks. It was this data, U.S. home construction surge, that drove up the U.S. dollar index. and we saw a drop in the price of silver. But again, against the backdrop of everything that's happening globally, the de-dollarization trend, put out a video on that yesterday. 9 Asian central banks dumping the SWIFT system and the dollar. We've got geopolitical risk around the world. We've got a Fed that very likely, regardless of how much they want to jawbone these markets, I think they're going to be reverting to an easier monetary policy, and I just think that's unavoidable. So, now is the time to be getting into physical silver. I kind of regret, not really, I don't regret making a purchase, but I did pull the trigger on one of those Arger Heraeus 1 kilo bars that SD Bullion had on sale, and it looks like, looking at their sales section, they have sold out of those. Looks like some other people took advantage of that. But they do still have some great stuff on sale. They got these 10-ounce Germanium Mint bars, which, Germanium Mint makes some really good stuff. I'm a big fan of theirs. So there's still some good stuff to go. I'm going to go to the chat here before we wrap this up. I've got some questions. A Spy says, should I go to my local coin guy? Would get taken for a ride. When you were trying to sell silver, it's like a mark on your back. If you don't know what you're doing, I guess. If you have a local coin shop that's trying to lowball you, if you're going to a pawn shop or something, sure. But if you go to a reputable coin shop that specializes in bullion, not numismatics or collectibles, and it's not a pawn shop where they're selling, weed whackers and guitars on the shelves, and they're actually focusing on bullion, then I think that you can usually get a pretty fair price. And yes, the faster you have to liquidate your metal, the lower price you'll have to take. If you can actually take your time and be kind of a stronger hand and sell at a time of your choosing, then you will not getting taken for a ride. But it's like anything else. You gotta know what you're doing. Absolutely. And I can't say I'm super well versed in selling silver because I've never sold an ounce of it. I've sold plenty of other things, but never silver. So I don't know too much about it, but I do know that most bullion shops, and even SD Bullion, we can check out, you can go to sdbullion.com, I think /sell, and they'll tell you what they're buying silver for right now, and it's usually a pretty decent price. But yeah, I wouldn't say that silver is a trap just because you have to be a little bit circumspect about how you go about dealing with it. It's just like anything else, in that way, then yeah, stocks are a trap, houses are a trap. Well, he says when you sell your silver, they know you need to get out. Well, yeah, so don't put yourself in a situation where you need to get out. That would be my suggestion there. I don't give financial advice or anything, but, don't put yourself into a position where you have to pay an emergency expense with silver. Have some fiat currency around, have an emergency fund so that you're a strong hand, so that you can sell at a time of your choosing. Yeah, if you put yourself into a situation where you have to liquidate any asset, you're probably, that's what's called a motivated seller, right? So if you're looking to buy an asset on the cheap, then a motivated seller is who you want to be buying from. And that's just free market economics. It's supply and demand. And you got Jim there in the comments saying most stackers don't buy and sell in the same year. Yeah, if you want to flip silver, if you want to have liquid silver, go buy some PSLV. Go buy some Sprott physical silver ETF because it's extremely liquid, very narrow spreads. You don't have to take possession, do anything. But if you want physical metal because you're looking for generational wealth or non-correlated assets that you can get outside of the financial system, don't count on your physical metal as something that's going to be, the most liquid asset. And it is liquid. You can always find a buyer for it. But yeah, if you want to be trading in and out of the market, you're probably better suited with something like an SLV or PSLV ETF or something like that. Because, yeah, stacking is a little bit different. Stacking is sort of like your insurance against a currency crisis or a sovereign debt crisis, which, very likely we have on the way, folks. If you've looked at the U.S. debt, it's almost $32 trillion, and we basically had an admission by the Treasury and the Fed and the powers that be that the debt's not getting paid without borrowing more money. That's why they said that if they didn't raise the debt ceiling or suspend the debt ceiling, there would be a default. So, that's the reason you have physical metal. It's not as like an emergency fund that you're going to pay for, a car repair with. Some people do that. More power to you if you want to use your silver that way. but that's not really the ideal situation for a physical metal position. Again, none of this is financial advice. I'm just giving you my thoughts, but I wouldn't say just because, physical silver can be more difficult to, say, unload than paper silver that it's a trap. I would say that the paper silver is a trap because the thing about the paper silver is very liquid, but at the end of the day, there's not enough physical metal backing it up. So, if you get to a currency crisis or something like that where everybody's trying to, get the physical metal, there's just not going to be enough underlying. So really the trap is like a futures contract, which is kind of like a game of musical chairs. But that's just my thoughts. Give me your thoughts in the chat. Do you think physical silver is a trap? Or do you think that paper assets are a trap? Now, I mean, I can pretty accurately forecast that I think, where most of the viewers of these videos are going to fall on that question. But anyway, let's see. I think there were some other questions in the chat. I'm on the PC today, so it's a little easier for me to scroll back and go through this. Looks like everybody's just arguing with a spy, so I guess I addressed everything that was going on in the chat there. Anyway, that's what's going on with silver. So I just wanted to hop on here and comment on why I don't necessarily think that this fall in the price of silver is something to be concerned about. I think it's a buying opportunity. I think there's ample evidence out there that the economy is still kind of falling apart. Just because there are some new houses being built, that's not an indication that we're not heading for a recession. Although I think it does mean that the home builders assume that perhaps credit conditions are going to be less tight than the rest of the markets anticipate later this year. The Fed isn't looking at housing starts that much. They're looking at the banks. They're looking at commercial real estate. That's the thing they're concerned about. I don't think they're too concerned about housing. But I'm going to still be stacking. I did buy some silver earlier this week. Am I too upset about that, seeing this fall? No. I mean, that's what dollar cost averaging is all about. If you buy some silver because you're convinced that it's undervalued and then the price falls more, then you buy a little bit more and you bring your average price down. Because that is one thing about buying undervalued assets. I mean, there is always the risk that they could become more undervalued before you see that trend reverse. And I mean, that's largely been the case with precious metals for the past decade or so. I think a lot of people have become discouraged. A lot of people have gotten out of their metals positions. And I think that's unfortunate because I think that we are going to see a payoff from holding hard assets in the relatively near future. Silver has been more or less flat for the past 12 years. I mean, it hit its last peak in 2011 at $50, and it's just kind of been trading sideways since then. It's much lower than that now. And I do think that, 10 years from now, we're going to look back on $23 silver and we're going to think, gosh, what a opportunity that was. It's crazy that you used to be able to buy silver for that much. Caleb Tomanman said in the comments, going all in is the trap. Yeah, don't go all in. Absolutely. And that's goes back to what I was saying. You want to have some cash on hand so that if an emergency expense or something does come up, you can pay it with fiat currency and you're not forced to liquidate your tangible hard assets at an inopportune time. A Spy says, okay, so you hold silver for 10 years, but now you're called a speculator if you had to sell this year. Well, no, you're not well, listen, I would just consider it unwise if you are forced to sell your... I know things can happen. Obviously, things can happen where you need more fiat than you might have on hand, but it's critical to have an emergency fund of fiat currency if you're going to be stacking. I mean, I really can't emphasize that enough, that you don't want to be caught in a position where you're forced to sell your physical metal if you can at all avoid it. And yeah, I mean, if you're buying and selling silver within a relatively short time frame, then I do consider that somewhat speculative. And look, there's nothing wrong with speculating. It's just that physical metal is really not the best instrument for it. Use an ETF. If you want to speculate, move in and out of the market, that's the way to go. HVAC Residential Basics says stacking is a sickness and there is only one cure. More silver. I know. It's like being a treasure hoarding goblin sometimes, being a stacker. But anyway, that's what I wanted to cover today. I don't really have anything else. Thanks for tuning in, everybody. Consider, adding to the stack on this dip. That's probably what I'll be doing. I'm not sure if I'm going to buy it or not. Certainly, if it drops more, it probably will become too tempting, but we'll see. I would not take this as a sign that, silver's a trap, though. I think it's just an opportunity. I like when the price of silver falls because I am accumulating for the long term. I think in the long term, we are going to see higher silver prices. I think it's almost guaranteed because when you look at what the Fed's doing, you look at what the government's doing, they're spending a lot of money that they don't have. The debts are growing out of control. The levered up economy that we have will not be able to sustain these rate hikes indefinitely. In fact, the cracks are already showing. We've had 3 of the largest bank failures in U.S. history already this year, and hey, we're only like halfway through the year, folks, so 2023 is probably going to still get a lot more interesting. We've got a lot of events that will be taking place throughout the rest of this year, which I think could really stoke the flames underneath the price of the precious metals, and I'm still stacking. So thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker out. Don't forget to like, comment, and subscribe.